and I know most small businesses fail. And if I were to have to probably say one reason, it's because they don't understand the financial metrics and how to manage those. They just know the idea.
Hi, I'm Terrell Turner, the host of the Business Talk Library, and today I have a great guest on, Andrew Krzesinski. And the reason why I brought Andrew on is because a topic that a lot of business owners, really come into, and is something that's very, critical to their business, is how do they get the right level of capital working in their business? Now, you can do it via investors, the people do crowdfunding, you can bootstrap it, but one of the effective ways of doing it is getting financing from a bank or a financial institution. Now, something that I think is a huge misconception that a lot of people have is, oh, I'll just call the bank when I need money. And so I wanted to bring on a commercial banker to talk about, what does loaning money to a business look like from the commercial banker's perspective, so people aren't waiting to the last minute, or they don't have the wrong understanding about what that relationship is like. So welcome to the show, Andrew.
Hey, thanks. I appreciate you having me.
Absolutely. Absolutely. So before we jump into, the commercial banking space, kind of what was your background before coming to the commercial banking role you currently have?
So I graduated college years ago with a finance degree. And then from there, just with that, just wanted to start out in a bank. So moved to Charlotte about like 23 years ago, and just worked my way up from starting in the branch, and then worked my way up on a small business and the commercial. And I at one point worked for a privately held company. One of my clients hired me, and then back into commercial banking. So primarily just always somewhat in this field, working with privately held businesses.
Mhm. Awesome. Now, when it comes down to commercial banking, like what does that actually mean? Because I'm not sure if a lot of business owners actually understand what that means.
Yeah, I think it's it's a good question. I always say the easiest way to communicate what something is to tell people something that they know, and then draw the comparison, the link between the two. And so I always tell people, like, when you're an individual and you open up your first checking account, you go into a bank and you find a person in one of the offices, and you say, open a checking account up. And then you can also go to that same person, maybe get home equity loans and things of that nature. I'm basically just that individual for businesses. And so I just help people with checking accounts and loans. And the only difference is the level of complexity with the request and the level of risk with the request. But in essence, I mean, I'm the same thing as a personal banker that just sits in a branch. We all do the same thing. Bankers have deposits and loans, and non-interest income is what they're responsible for. It really doesn't get too much different.
Mhm. Gotcha. So now, when it comes down to, the whole space of, commercial banking, when it comes down to small business owners, when should a business actually start like developing that relationship? Because what I get the sense that some people wait until they need something to try to kick that relationship off. What's been like kind of your perspective on that?
So, I think about it like this again, to give a comparison about something we know. When we look at a marriage between a spouse, a husband and a wife, if it's a good marriage, it's usually because both a husband and wife are good stewards in the relationship, and and do the right things. And so then those two come together, and that's usually a good marriage. And banking is the same thing. You'll never find a degenerate banker, a degenerate client, and then the two of them have a great working relationship. And so typically when those relationships work well, it's the client is managing their financials well and is saving money, and then has managing their cash flow and their bottom line well. And then a bank is doing the right things to be able to have the ability to serve that client through financing of buildings, equipments, etc. So it's them both working together. And you want to prepare that. That takes time for both people to set up for them to eventually come together. If it's your brand new client, you're just coming, or a brand new business and just opened up, a banker can't do much for you except open you up an account and kind of start advising you at that point. But they can't necessarily, it's very challenging early on to help them finance the upstart of their business. And there's a lot of confusion in the marketplace about that.
Mm-hmm. Now, when you talk about, like you're just starting off a business and, like I said, the best thing they could do is open the account and then start the advisement. During kind of, I guess you'd say that dating process, to kind of think in the same analogy, is during that dating process between the business and the banker, are there things that they could be doing during that process to kind of help that relationship mature to the point they get to a point where they can take out a loan?
Say that my internet is connecting.
I was saying, like,
say that again.
I was saying kind of during that dating process between the business and the bank, are there things that they can do during, like I said, they just started their business? Are there things they can do
Yes.
kind of along that way?
Yeah, so that's a great question. So, a lot of it, people, when they think of banks, they want to be able to finance their business or the needs of their business, right, to grow faster, because business are typically that they need capital to grow their business. And so banks use tax returns to determine whether they can lend to you. And tax returns are meant for the government to manage you paying taxes to them. They're not meant to really be documents to derive and understand your cash flow. So the issue between client and bank is the client is bringing these tax returns to the banker, and then the banker is trying to extrapolate from these tax returns if there's any real cash flow. So some of the problems with waiting to meet with a banker or just doing your tax returns without advising a banker is some of the dialogue you will have with a banker, if you have a good relationship, is to say, like, hey, I think I'm going to buy this building next year. How much money do I need to keep in the company? If meaning your business tax return separate from your personal tax return, you don't want to fleece all of your company, pull out of the money out of your company and put it into your personal name and spend too much. So you really want to, you're leveraging the company. If you're pulling all the money out of it, the company has nothing in retained earnings. It has no net worth. And then you go to a bank and you want the bank to lend to the company, they can't. And so a lot of times you'll want even your banker and CPA to talk, or there'll be some dialogue in there, but that takes years of planning to the point where then the bank can support your needs. Banks loan money at low interest rates, and they're not equity partners. So people say, well, if something goes wrong, you have this. No, if something goes wrong, the bank loses money, and the bank's not in the losing money business. They lend the money with low margins, but the payments are consistent, and you got to diversify the bank's risk over all these clients. But we're not in the business of we don't share in the upside of the business. So it's a high risk business.
It's one of those things I tell, businesses, like, if you're anytime you start getting other people's money involved in your business, like it's going to come down to the economics of the deal. I mean, and from the bank's perspective, I mean, when you think about the economics of the deal, let's say if a business is coming to you to say, hey, I want to take out a loan, let's say 2 years from now to kind of expand my business. Is it better for them to bring you a business plan, or, what would be kind of the things you would kind of look for, or what things should they be thinking about bringing to you?
Yeah, a business plan, a lot of times people bring these in-depth business plans, in terms of that stuff's fine and it's good for them to have, but it's not necessarily what you lend off of. And so we'll more or less talk about how they're growing their business, the cash flow of the business. For a bank, cash flow is number one. So if you want to have so much cash flow historically that that there's discretionary cash flow to support future debt, if that makes sense. And so cash flow is the number one thing. If you don't have cash flow on your tax return that the banks can use to support debt, then there is no deal. Some people, I even use this example to some people to help them understand the importance of that, is if you brought me a $5 million CD and said, I'll give you a $5 million in cash, put it in a CD, and then you can use it as collateral, and I only want $1 million. And however, if we look at your tax returns and you don't have cash flow, we won't even lend you that money.
Wow.
And so a lot of people think it's all about collateral, and it's like, no, it's not about collateral. We're a silent partner. We're not looking, if the deal goes sideways, to recoup our loss by your collateral. That's not our goal. We use collateral to mitigate risk, but first and foremost, we want you to be able to service that debt. We don't want to be a part of your business. We don't want to own or have recourse. Our goal, we have recourse, but our goal is not to execute on that recourse. Our goal is to be a silent partner. You be sufficient in managing your business. And so cash flow is the most important thing. And so then individually as a business owner, well, how do you get cash flow? Well, you have to have good margin. Some people get into business and there's not enough margin. And going back to that Shark Tank example, that's one of the first things they ask: how much margin? They want margin because they know that gives you discretionary cash to pay for things. Too many times where business owners are like, I'm not sure what to charge. I mean, one way to back into that number is there enough margin where I could grow it, where I could add employees, where I could fix vehicles, or if there's your capital expense and things of that nature. Can I hire a CFO? Can I hire an HR department eventually? But if there's no margin, the margins are too thin. It's just really a high risk venture that you might lose your shirt in the process of it and never really be able to expand, and it's just really stressful. And so that's one of the things to kind of think about it from a business owner standpoint.
Mm-hmm. Now, I guess, do you find that many business owners understand that, or is that something that
No.
you end up having to educate them on?
Yeah, it's really interesting because I find that most business owners, when you're in that 0 to 1 million in gross revenue, or, everyone wants to be an entrepreneur and get started, you usually fall in love with something. You either like painting, or you like working outside, or you had an idea. So, and the scoreboard is your financials and your revenue, your income, and knowing how you're doing financially. And so that's really the challenging part, is when people get into the business, they have a good idea and they have a great work ethic, but they don't know the scoreboard. So it's like playing a basketball game without the score. You don't know if you're winning or you're losing. And so that's why I think, and I know most small businesses fail. And if I were to have to probably say one reason, it's because they don't understand the financial metrics and how to manage those. They just know the idea, and the idea, it doesn't make it right. It still may be a good idea, still may be something everybody wants, but the numbers may not be right.
Hmm. No, I think that's a good point, because that's like 2 weeks ago, I was interviewing a gentleman that was recently on Shark Tank, and I guess he was on Shark Tank this season. And I was asking him kind of how that process was, and he was like, one of the interesting things for him was, and he's out on the West Coast, so he's used to being around, I guess, the venture capitalists on the West Coast and the investor there. And one of the things he talked about was, you spend time, you do your pitch. And he was like, a lot of the questions became like looking at the past, like, hey, what were your sales? What were your margin? What was your performance? And he was like, what he was used to was, everybody looking at the future of where this is going. I mean, and it's very interesting, like I say, when you think about that, to where said a lot of people have great ideas and they're trying to sell you on where the future of this could go. But like I said, when you look at the underlying, like, okay, all right, do the economics really make sense? Like, if you could get to that future, that'd be great. But if the economics don't make sense, then you probably don't have a deal if you're dealing with a bank or a serious investor.
Yeah, you make a fabulous point. If you're sold on the upside versus what is now, don't do it. And so many times, that's more exciting. Like, hey, right now it's tough. We're working, night and day, and the money's tight, but in the future we could have this. Do you want to do that? And it's like, well, no. You got to first be right with what's now, and then if the future holds that, manifests that wonderful utopia that you're, then that is what it is. But you got to be home with where it is right now, and then you grow incrementally. A lot of businesses, they look like they're enormous, but I was reading somewhere recently, but it's like 10 to 15 years before these things really start to get off the ground. And so you always got to be happy with where it's at right now, knowing that there is the upside. But what if it just kind of stays status quo? I get people here trying to come to me with different opportunities, and they're like, well, we could do this right now, but then but in the future you could do that. And I'm like, well, grab me when you're doing that. And then they never come back, because that never really happens. But they're hoping to bring you in with the thought of this future thing occurring. And it's like, no, to your point, what have you done previously? Where are you at? What sales have you had? Because you're going to be incrementally, and that's the tough thing. It's going to be incrementally better from where you were, is more likely than for you to hit the lottery. And then there's an exponential curve. And then all of a sudden you're the lottery ticket and everyone wants to be around you. Most businesses are very, very slow. But everyone has that dream of riding a unicorn across a rainbow, and it's like, nah, you probably get incrementally better. Let's just hope for that.
I think that's very interesting, because even when I'm like working with clients and kind of building out financial forecasts and models and stuff like that, like I was working with a restaurant owner last night, and we were just talking through things. And one of the things that they're talking about, well, if we did this and numbers would be here. I'm like, well, we're not going to jump from 0 to that. That's probably 4 to 5 years off if these incremental steps happen. But I'm like, if the incremental steps don't happen, there's no way in the world you're going to jump to that.
And my other favorite thing, that my buddy of mine works in New York in accounting, and I called him years ago, and I was asking about this one client and thoughts and perspective, and with great detail and the numbers and the opportunity and the upside. And he said, well, I was waiting for some insight that would be profound, or how to do what we're trying to do. And he said, well, let me leave you with this. After you saying all that you said, he said, just because you say it's so doesn't make it so. And I thought, it's like that restaurant owner is like, if we do this, then we could do that. And no, just because you say it so doesn't make it so, right? To your point, where are you at? And we can work moving that in small increments upward is more realistic in business than somebody coming up with some profound thing that's just going to make the business explode and then money fall from the sky. Doesn't usually happen.
Gotcha. So when you think about, kind of like your role in commercial banking, like, are there any types of businesses or industries you focus on, or different sizes of businesses that kind of you have a niche in?
Yeah, so in my current role, we deal with commercial industrial businesses, manufacturing, distribution, anywhere from about like 5 million to 50 million in gross revenue. It's top line revenue for the company. But I've done everything from smaller businesses and to commercial real estate lending, and it just depends on the appetite of the bank that you're at. I mean, one of the things is you're helping people to find a bank. You want to know what the bank specializes in. Some banks specialize in residential real estate building, and I know some banks in Charlotte that do that. And some banks just look for investor commercial real estate that's not going to be owner occupied. And there's banks that's all they target. And then a bank like I'm with now focuses on good operating companies that typically have employees. And so you just want to know what your bank specializes in that you're going for. You don't go to Burger King and ask for the best steak in town. I mean, they don't serve that. But there's confusion. There's good bankers, bad bankers. So sometimes the bankers are confused, and so that happens too. And so it's not always bad clients. Again, it goes back to that marriage. Both sides have to be good at what they do and understanding. And there's errors on both sides for sure.
Mm-hmm. Now, in line with that analogy around marriage, I mean, one of those things that, that you hear a lot of advice where people are like, as you're dating, getting to know different people kind of get that concept of dating, getting to know people, and out on dates. Like, how do you, start to get to know the banks to really understand, like, hey, what type of bank is this, or what type of deals do they specialize in, or like, what are ways you can go about getting to know or date that banker before you commit?
Yeah, so that's a great question. So I always would ask somebody, just like anything, if you want to get to know somebody, ask more questions. Like if you go into the bank as a business owner and you're just pitching your idea, you don't know if that banker has any clue or clarity on what they do or who they are. And so I would, as more importantly than going in and trying to get money from a bank, would be asking questions to the bank. Like just like you just came to me moments ago and said, what do you do and what do you specialize in? And then I told you, hey, we're on manufacturing. This is the top line revenue. This is where I sit in the. This is how I serve people in the community through the bank that I work at. And so ask questions when you go in there. A lot of these people don't know that these banks are that we sell. Our inventory is money, and that's what we sell. And so be careful. You're going into a salesperson pitching your idea, and they're going to try to sell you something. That's how we make money. We are for-profit institutions. We are not nonprofits. We are trying to make money. I think it's funny when a lot of people come in, they almost feel, and banks are such staples in society, that they go in and start pitching, and they're pitching to a salesperson. I mean, it's like, you got to be careful what you're doing in there. Ask questions. Make sure that you want to be in business with that bank. Make sure you understand what they are and who they are. I always tell people, tell them to evaluate me this way. You're going to ask questions to me. I'm going to communicate. We're one of the most highly regulated industries, right? Mm-hmm. And so there's not gray. There's not very little gray in what we do. So you ask me questions, I communicate. I should inform you. I should provide you information. I should provide you clarity on how to work with us. If you're not getting that clarity from your banker, or you feel confused, then you're with a bad banker. And you might be with a bad banker and a bad bank. Mm-hmm. Wow, meaning when I say bad, not for you, right? It's not necessarily evil, but it just not, you might be asking a bank that does residential home loans or for builders, and you might be asking them, I want to work with a business, and that may be the wrong person, but they're going to try to get you some debt because they get paid to do that.
Mm-hmm. No, I think that is great advice. And so, if someone's interested in, of reaching out to you and learning a little bit more about, say, the commercial banking that you do and how their business can possibly work with you, what's the best way for them to get in touch with you?
Yeah, I would say, LinkedIn is typically the best way. Then you can see my a little bit of my banking resume and kind of what institution I'm at, and you can message me through there. So just Andrew Krzesinski, you put in KRZE, and I'll be the only guy that shows up probably in the search field with that last name. So it'll be pretty easy.
Awesome. Well, before we wrap up, one question I like to ask every guest that comes on is like, when it comes down to, your background and just, the things that you've seen, what's 2 pieces of advice that you would share with other business owners?
Yeah, with business owners, the one thing is with new business owners, there's the proverbial glass ceiling that people hit. Like, why can't I get over $1 million? Why in gross revenue? Why can't I get over 5 million, 10 million? And it's interesting, in these segments, there's certain people that come in and they will buy businesses of that certain sales size. And basically they know the infrastructure and they know what to do. And so the hardest thing with clients early on is, that 0 to a million guy or gal that's running that business, they have to be human resources, they have to be CEO, they have to be CFO. And so because they have to wear all those hats, and they're in the weeds of the business, it stops them from learning mode versus performance mode. They're always in performance mode, so they can't stop, learn, and then grow the business. Mm-hmm. And that's really one of the challenges for all business owners, and they don't realize how to stand back from the business and work on the business versus working in the business. You got to get then how do you solve that? Well, then you got to get mentors. You have to have resources. You do fractional CFO work, right? Mm-hmm. Yeah. So, I mean, somebody, hiring you or seeking counsel from you would be critical. And then different areas, personalities. Some of the businesses I work with, they have the wrong people in the wrong job, and that really stunts the growth of the company. And you think, well, why would they leave it that way? And it's like, well, there's something in those relationships. So maybe they really just like the person. Yeah. And they can't see beyond it, because people are in some of these relationships, and even unfortunately abusive relationships, but will stay there. And that's not even necessarily an abusive relationship. It's just stopping your company from growing, but you stay in that relationship. So there's a lot of psychology within the dynamics of why some businesses just stay stagnant. It's intriguing. There's great literature out there, to read, and I would, as a business owner and entrepreneur, I'd be an avid reader. That Jim Collins, Good to Great, and Built to Last. Some of those books are good, and there's just so much information out there that I would just be constantly making sure that I put time aside to educate consistently, and so I can work on the business versus always in it. I think are a big challenge. Mm-hmm. Kind of gave you a bunch of different stuff there.
No, I think all of that is really good. I mean, especially like I said, that there are a lot of people who do hit that glass ceiling. And, like I said, if they're not figuring out how to get past that, then, I mean, they're just going to be stuck. So I think that's very good insight. So, Andrew, thank you so much for coming on. Thank you for sharing your wisdom and, providing a little bit more clarity on what the business banker, commercial banker relationship actually looks like. So thanks for coming on the show.
Yeah, glad to help you out. Thanks so much for your time.
Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.